So we were chatting before about the fact that last year, and certainly a year ago, the question was being asked, is China still investable? Which after decades of rapid growth and opening investment was a kind of surprising question. There was so much uncertainty, so much policy volatility, from zero COVID to a crackdown on regulatory crackdown on real estate, the driving out of many private sector big tech companies that were so successful before, and of course antagonism between the US and China over Taiwan, but over much more than that. Now, investors are wondering, well, maybe China's back. And our question is, how will China guide its own economy? How will that play out on the international stage this year as it emerges from zero COVID? Xi Jinping has executed a sharp U-turn on policy, most obviously on zero COVID, but it seems also on other areas of economic policy. But I think there's still a lot of uncertainty about economic policy. And then, of course, we have the latest uncertainty generated by the discovery of a Chinese spy or weather spy balloon floating over the United States and other countries. So I want to turn first to David for an overall take on China's likely path this year and how you see recent policy developments, both in the economic and political sphere.
Okay, thank you very much. Great pleasure to be here. I would say that I think we can be confident China will do better in 2023 than in 2022. Last year, China actually grew less slowly than the world economy, and that would be the first time in many decades that China grew less slowly than the world economy. So they had a terrible 2022. In my view, they're exiting from the zero tolerance policy surprisingly well. So most analysts I know are surprised at how quickly that seems to have passed. And so consumption is clearly bouncing back, and they're going to do better this year than last year. But a couple of warning things to keep an eye on. We just had the main holiday, Spring Festival. If you look at some of the indicators like passenger travel or tourism receipts, domestic tourism, they were all up very significantly from last year, indicating this is going to be a source of growth. But they're all, the ones I looked at were all down compared to pre-pandemic. So I would say we're bouncing back.
The more professional urban middle class group, they've built up a lot of bank deposits they can spend, and that'll be an important force. But for a lot of ordinary people, it depends on getting back to work. And then I would just briefly say that real estate is still a headwind for China. I think they've overbuilt the housing stock and basically introduced measures to crack down on the bubble, and which have been pretty effective, but they probably overdid that. So getting out of that real estate mess, it'll be tricky to do that without having an impact on growth. And then finally, I would say, despite 2022 being a weak year, the export sector was very strong. China has maintained its share of world exports. U.S.-China trade hit a new record in 2022, despite the alleged trade war between the two. But then at the very end of the year, November and December, China's exports really took a sharp dive. And I think that's cyclical. I think that's the world economy, the US, Europe slowing down. So exports are probably not going to be an important growth sector in 2023. So you've got these weaknesses, at least parts of real estate, some household consumption, some export, but you also have that very low base from last year. So the IMF is forecasting, I believe, 5.2 is their current projection for the year. Nobody really knows for sure what's going to happen, but that's a reasonable thought or scenario, we could call it, that it'll be much stronger than last year, but not quite back to pre-pandemic capacity or trend.
Thanks very much. And that's interesting, the point that you make, that we should be looking at the trend, not just the pre-pandemic trend, not just getting back to that level, but getting above that level to make up for lost ground during the pandemic. And of course, the United States did that relatively quickly on output, less so on jobs. I want to turn to David to ask how you see where investment might make sense in which sectors before we turn to more questions about government policy. But one of the things that strikes me is that in the US, mass consumption, if you like, was kept up during COVID by government checks and government support. And that's a contrast with China. So that may also affect perhaps whether the labor supply comes back, whether people are willing to go back to work in a way that has not been the case in the US. But how do you see that playing out across different sectors?
Right. So I think it's hard to separate that question from the geostrategic concerns. Do you want to include that?
Please go into that.
So leaving aside the geostrategic concern to start, I agree that, this is going to be a somewhat dualistic year with some sectors doing quite well, recovering quickly, others less so. So I think some of this is obvious, consumer products like toothpaste and a lot of ordinary consumer items, those are likely to be good growth sectors. I think there probably are parts of real estate where firms that specialize in distressed debt, for example, might be able to navigate, but that'll really depend a lot on the specific regulations, how much freedom. But in general, you wouldn't expect real estate to be, a particularly hot sector. And I think the government's going to continue to put various subsidies and efforts into the high-tech areas like semiconductors, biotechnology, AI, and that's where the geostrategic issues come in. I think it'd be tough for American firms. First, I'm not sure the Chinese particularly want American or even foreign firms in some of those areas. But then we have restrictions on the US side, and apparently Treasury is drafting further restrictions, this has been reported in the press, which would be prevent financial investment in a number of key sectors, not including biotech, according to the press reports, but definitely including semiconductors and artificial intelligence, cloud computing, quite a few high-tech areas, which should be promising because this is where China is heading, and there are lots of young engineers in China that you can employ to develop that. So I do think there are high-tech sectors that are going to be shut off for geostrategic reasons. And then it's going to be a dualistic year. So there's going to be some areas, I think, particularly on the consumer side, in other areas that are not so bright. But let me just end by saying, I probably should have started by saying economists are not necessarily the best people at identifying investment opportunities. It is quite a different thing, but I gave you my sincere answer.
Yeah, that's interesting. And David?
Well, I was going to add, so, I think here in Washington and in the West more generally, there's a storyline that Xi Jinping is anti-market and he's kind of shifted China away from Deng Xiaoping's policies. I personally think that story in Washington is overdone, that it's a very complex situation where clearly Xi Jinping basically killed the private online education, certainly took aim at digital financial economy, Jack Ma and others. But I like to point out that if you look at broader indicators like the overall tariff rate for imports, that was pretty stable throughout Hu Jintao's 10 years. And then it's come down. It's been cut in half during Xi Jinping's first 10 years. And partly that's because they joined the Regional Comprehensive Economic Partnership, and that ended up reducing a lot of the tariffs with their partners, but that is trade liberalization. And then the OECD measures, has an index of FDI restrictiveness. And 10 years ago, China was modestly more restrictive than most of the other big emerging markets like Brazil, less so than India, but more restrictive than Brazil and Mexico, quite a few other big economies. And then that index has been cut in half under Xi Jinping. And now China stands out as the most open of big emerging markets. And that's because they've opened up sectors like automobiles and financial services. Now, that kind of index is always just looking at the laws and regulations. Yeah. Of course, it's possible that it's open on paper, but it's not really open. But actually, we see a lot of investment in electric vehicles, for example, European and American firms putting wholly owned subsidiaries in China. So I think in those sectors, there has been genuine more openness, and that complexity is just hard to capture in press reports or a simple State of the Union speech, for example.
And the indicators of foreign restrictiveness and so on are also telling. I suppose, or I'd like to ask David, if you look forward and as an economist, not as an investor, how do you see China's medium-term path, given that, you know, there is one story which is it's going to be much slower, Nick Lardy with the revenge of the state, that we've gone back to, or Xi Jinping has gone back to a large state-owned enterprises and favoring those, which will depress growth going forward. But maybe that's not really a good picture of the prospects.
Well, I think they're clearly going to be growing more slowly, you know, than they were in sort of what I think of as the golden age, you know, first decade of this century. But I think that's mostly because of demographics and because there's been such an advance. You know, they're at about 25% of U.S. productivity. You know, they started reform at about 4% of U.S. productivity. So that, you know, there's a lot of catch-up potential, but there's a little bit less catch-up potential than there was 20 or 30 years ago. Even in the last decade, the decade ending in 2020, the urban prime age workforce increased by 100 million people. Okay. And now that's just come to a screeching halt. It's now projected to be zero change in the prime age urban workforce, basically demographic decline balanced by a little bit of remaining rural urban migration. So pretty much the best they can do is a stable urban labor force. And I think you're certainly not going to be growing at those old rates with just a stagnant labor force. So I think some of those fundamentals are really important. And then I do believe that China could counteract those tendencies to some extent by really bold reform. And I don't think we're likely to get really bold reform. You know, I think the state enterprise share of the economy, you know, is quite stable. It hasn't really increased, but it was going down for a long time. And now, you know, it's not going down. It's not likely to go down. So I think there's a good chance we'll just continue to have this pattern where particular sectors are opened up. And I think some of this industrial policy, both in the US and China, will fail. And we'll see who's nimble enough to move away from it. You know, you start out trying to protect certain industries and it's probably not going to lead to success. So are you willing to then, you know, open up and entertain more competition? To me, the policy competition is some of the most interesting thing to watch, you know.
Yes, talk about that a bit, because people here tend to think, oh yes, the CHIPS Act, the Inflation Reduction Act, the executive orders are all ways that things that will constrain and constrict China and China's growth. But maybe there's another way to look at it, which is that they make things more expensive in the United States. And even if allies join in with the United States effort, it may not constrict China so much. So do you see there being a kind of crimping on China from the CHIPS Act and the IRA? First to David and then.
Yeah, just so quickly, so we do see a certain amount of technology decoupling between China and the US. And I think that hurts China more than the US. And there are certainly some members of Congress who are satisfied with that. But unfortunately, I think there are a lot of people in the US who think that this hurts China and it's good for the US economy. And to me, that's a dangerous way to think, because I'm pretty sure this is not going to be good for the US economy.
Thanks. I want to get back to the relationship between the US and China, but before then, on climate change, since you've talked about electric vehicles, and that has been such an important part of China's growth and their penetration, as you say. More generally, they have a huge role to play in the fight against climate change. And on the one hand, they're a leading producer of electric vehicles, but on the other hand, they're a major emitter of carbon still. And what do you see as the implications of the green transition for China? Maybe I can ask you that, Run. And then, David, I'd be interested in your view on, will China go back to playing a kind of positive role or willing to talk to the US, with the US on climate change?
I think I can brief. This is an area where I'm moderately optimistic about US-China cooperation, but I kind of hesitate even using the word cooperation, because we each have a common interest in getting to zero carbon. You know, we can argue whether it's 2050 or 2060. We have a common interest and we're each pursuing it pretty aggressively. And so it's, you know, it's not unrealistic to expect a pretty good outcome for the world. Where I put the moderate, where I qualify this is, you know, if we had better cooperation, for example, if China can make electric vehicles very inexpensively or solar panels, if all you cared about is the environment in the US, you'd want to import all of that stuff as cheaply as possible so we can make the transition as quickly as possible. I don't think, you know, I just think it's not going to be realistic to expect massive electric vehicle exports from China to the US. Yeah, and we've already cut off solar panels. But, you know, that's an interesting story where, you know, we don't import solar panels from China. We have a 250+% countervailing duty. But a lot of Chinese firms have shifted some production to Vietnam and Malaysia, and it uses Chinese polysilicon and has a lot of Chinese value added. And our trade office was thinking about looking into that and maybe putting countervailing duty, but Biden signed an executive order assuring that for at least 2 years, there'll be no duties on the import of these panels from Vietnam, Malaysia, Thailand, Cambodia. So, you know, there are workarounds that make some of the ostensible protectionism completely meaningless.
That's interesting. I remember there was always a sort of frustration amongst economists that if you look at the bilateral trade deficit, you miss out an awful lot of the interactions that can develop with other countries importing and then re-exporting. So David, you were in the middle of the relationship between the economic and financial relationship between the United States and China, and everything spills over. So that was also a lot about geopolitics, but it was a very different era, you and I both. How do you see the relationship developing now? And just, I mentioned at the top, the balloon, the spy or weather balloon, spy balloon. And apart from just the surveillance, I think we do know that major countries surveil each other. But one of the things that struck me as concerning was that it appeared very difficult for the United States to make contact with their Chinese counterparts and get a quick response. So the sort of diffusion of tensions, which one hopes can happen with these sorts of events, did not seem to be there. And I wonder how you see that, if you think that, well, that was a learning experience, you know, really they need to figure out how to talk to each other. When I say they, I mean the United States and China. Or was it something that's just going to persist with the tensions that there are?
Yeah, there are several alleged hotlines between Washington and Beijing, but they really do not seem to work. And in particular, you know, if our military tries to contact the Chinese military, that doesn't work. And I think partly what's happening there is, you know, the Chinese military would just want this all to be answered at a political level, essentially. So, you know, they don't really have much to say in a phone conversation. In the case of the balloon, you know, obviously any program like that has very high level approval in China, top leadership, but probably the decision to send the balloon at any particular time, that could very well be made at what you and I would have called the working level, you know, but, you know, not at the political level. And then it kind of blew up in their face and they don't particularly want to pick up the phone.
My understanding is that Tony Blinken, Secretary of State, and others were trying to, again, this is press reports, were trying to contact Chinese counterparts, but could not get a response for 24, 48 hours. And then the response, the public response that it was a weather balloon was obviously not very helpful for defusing tensions. So I can understand, it may be that there is not a smooth sort of message delivery system to the leadership.
Well, even if there were a pretty good message delivery system to the leadership, I think there's a problem with concentrating so much power in Xi Jinping, because he's got a lot of things to worry about. So, you know, if this was not that important an incident, so if we have to like say, well, well, the president of the United States needs to talk to Xi Jinping about this, that's going to take a long time. That can take months to schedule those phone calls. And then I don't think we'd want to make that request, frankly, So there's just kind of a mismatch in how the two sides work, frankly. I mean, I think my experience was, I think our secretaries, of course, they're following the president's guidance, but I think they have some discretion. And I frankly don't see that on the Chinese side, at the minister level. I don't see there's much discretion. I think there's just kind of repeating talking points that have been approved by the very top. And that makes it hard for things to adjust quickly. The world changes so fast. And I think our interlocutors are often working from talking points that are out of date.
Yeah, that's an interesting point. I mean, we saw this a little bit perhaps with Treasury Secretary Janet Yellen and Liu He, who recently met, and now their next meetings have been put off because of the balloon issue. But for a while, they were talking to each other, and you and I know Liu He, but then that was stopped from a high level. So that kind of interchange is not happening at the moment. Do you think, yeah, well, there are rocky, this road is a rocky one and it will sort itself out? Or do you feel that there's been a big change in the relationship?
I do feel like there's been a big change. So I don't have much hope that we get back to what I think of as really positive, constructive relationship. I do think we can agree on various guardrails and prevent military conflict, and that both sides recognize that avoiding military conflict is really quite crucial. But lots of other things like the spy balloon and somewhat hostile industrial policy on each side of the Pacific. I think there are a lot of things that are now acceptable, and it just makes it very hard to get back to a good relationship. So, I mean, look, we're probably running close kind of toward the end, but I think a fundamental issue is we still have a lot of interaction between the US and China, but we have lots of hostility, frankly, on each side of the Pacific. Is this a stable equilibrium, or does it necessarily go one way or the other? And if it's not stable, it's going to go down, frankly. I just don't see political leadership on either side that would make a serious effort to improve relations. So either this is a stable equilibrium that we can live with, or things are likely to deteriorate. We get more serious decoupling, and we may end up having military conflict.
Well, I was just going to say, on the basis of your previous comments, that you don't see military conflict, and obviously that's the big Taiwan issue. But maybe that's dependent on whether or not the equilibrium can be maintained. But at least maybe not in the near term, you see that.
Yeah, I think Washington has gotten out ahead of its skis on this one. I don't think there's likely to be military conflict, let's say, in the next 5 years. I think it would take some serious accident or mistake. I don't think there's any Chinese plan to invade Taiwan. I mean, I don't think there's any plan at all. As long as Taiwan does not declare independence, as long as the US is not pushing for Taiwan to be a sovereign state, then I think that situation, I think, is, can continue.
Right, thanks. And if the rest of the world is slowing down under the monetary tightening of the US data.
Yeah, I was going to say, I basically agree with that. I think clearly there has to be some inflationary effect from this very significant increase in China's growth. But I do think growth will be slightly less energy and mineral intensive than in the past. So it won't necessarily give quite as much impetus, say, to oil prices as you would guess based on history. And then, as you say, Caroline, the US and Europe are clearly slowing down. So I think we may be heading for a kind of Goldilocks scenario. I mean, my own view is when like the price of petroleum plummets, that's kind of nice if you're an importer, but it's actually a source of instability in the world. So if US and Europe are slowing down and China is accelerating and its demand for some of these products is going up, I think that's by definition inflationary compared to the counterfactual, but I'm not worried about it. Yeah, I think it's a helpful boost.
Maybe a Goldilocks soft landing.
Yeah, for the world. Yeah.
Thanks very much.